Hi, it's Budget Day 2023 and here are my insights as a tax advisor. I'm concentrating on the tax changes today. There's been plenty changes on social supports and indeed a lot of talk on the wider economic cost of living environment. A lot of media commentary on this, but today in this log we're just going to concentrate on tax changes and my insights as a full-time tax advisor. I'm going to start with income tax and then work through to business taxes. And I suppose income tax would have got the main headlines. Changes are effective from next year, 2023. And in the main, for single individuals, you would expect a net refund or a net benefit of €830 next year on year compared to this one. And that's for individuals who are earning above, we'll say, €37,000 this year. It's because the main change is a result of our change in our tax band. We have a very simple income tax system, two tax rates, 20% up to a certain level and then 40% thereafter. That level was in around 37,000 this year. Next year it's a lovely even 40,000. So that change that change results in €640 in your pocket, but you have to be earning that level for that change to apply. The other changes apply way more generally. Tax credits have gone up by €75 generally. Most people are entitled to two, so that's €150. And USC, a small change there, really targeted at minimum wage workers. The minimum wage is increasing in 1 January to €11.30, so that's €40 in everyone's pocket as well. So all of those combined is €830. Clearly there will be differences if you're married, single parent, but in the main, that's what you're looking at. I suppose the key thing to note, and also no changes on PRSI and social contributions. The key thing to note from an income tax perspective is that there's been no significant change, in particular for high earners. We still have that rate, a very high marginal rate. So once you're on, we'll say 40,000 next year, your marginal rate of tax is still 48.5%. So for every €1 additional you earn, that's your tax rate. Once you go up to 70,000, that increases to 52%. So crossing that psychological barrier that the government is taking more of your wages than you are. So we're still a very still high marginal rates, still very progressive tax system, and those certainly earning on the lower minimum wages are their effective rates are a lot lower, which is a key cornerstone of our income tax policy. I suppose to move on from that and in tandem with it, one benefit and one which will probably, I suppose, in the wash mainly benefit, I suppose, those higher are individuals who are working for big businesses or multinationals, is the increase in the small benefit exemption. So now your employer can pay you or can provide a voucher of up to €1,000 in value. Applies from this year, 2022, and you can actually get two. So for those of you who've already received your voucher earlier on in the year, you haven't missed out. The employer can still make a top-up voucher, and that applies across the board, but clearly your employer would need to be able to afford to make this bonus payment to you. So that works out, if you avail of it, it can be an up to €500 tax saving for the employees compared to we'll say a cash bonus of the same amount. The other changes, and there's quite a lot of other tax measures in the budget. I suppose we have an early budget this year, so we have very limited information on them, but certainly a lot of mention and talk of them. But the detail will come. The first one is the new rent credit, well flagged, €500, essentially tax cash back for renters, applicable for this year onwards. But from this year, the information we do have is that the claim can only be made from next year, from 1 January next year. Generally, the rent credit applies to any rent that you pay to a landlord. And just one point on this that I've seen people seen people fall down on this point before, is that it can apply where you're renting. We'll say a classic example now is renting a room from your parents, but just watch, the rental income from your parents doesn't qualify for the rent a room relief exemption. So just watch that. It would be automatically regarded as taxable income, so may need to reflect on whether parents actually charge rent or not to their children, and no mention indeed of that rent a room relief exemption in today's budget. It just applies as normal. The next one on housing, I suppose the one that probably will get a lot of headlines, but is the vacant home levy, which seems pretty significant in that it's a levy at 3 times the amount of the local property tax. So for a house worth 300,000 would mean your total levies annually would be 1,500, but it seems to have very, very little bite. It doesn't apply to derelict houses, only applies to unoccupied houses, and there's loads of exclusions here, including holiday homes, including holiday homes, houses that are for sale, for rent, being refurbished. If you're living in a nursing home, if you're in a nursing home or sick, so it's really very, very minimal impact. Probably will apply to, I suppose, those who just have a second house and aren't using it for anything, probably rare. Maybe those houses which are in legal dispute, in probate. Again, very, very little detail here, and not much. The government doesn't expect to raise much revenue at all from this, which you can understand from the amount of the exclusions. The next one's on housing. I suppose there's a minor tweak to landlords, an extension of the pre-letting expenses, probably some lip service or something for landlords. The other ones are reliefs that were due to expire and have just been extended. Live in City, Help to Buy for first-time buyers, and the stamp duty refund scheme, which is absolutely crucial nowadays because our default rate of stamp duty in the country is 7.5%. So if you buy, we'll say, a greenfield site to build a house on it, in theory, your stamp duty is 7.5%. This stamp duty refund scheme reduced the rate to 2%, and that's been extended, unsurprisingly. Moving on to business, and I suppose the main big change, or the big headlines, is and especially for impacting SMEs, is the temporary business energy support scheme, which is a refund of additional costs on additional energy costs compared to last year. There had been talk about 2 schemes, one for larger companies, nothing announced today in the budget for larger companies. This will just apply to smaller companies, in that the relief is capped at 10,000 monthly. Not much more detail on it. It relates to energy increases compared to last year on a per unit basis. The minister did announce that taxpayers need to be tax compliant, so just one to watch. And also specifically, the minister in his speech mentioned case 1 trades, which would say professions so professions are technically case 2. One would suspect that will be rectified when we have more detail, subject to EU approval. So hence the lack of further detail on that one. The other business tax matters are all, there's quite a lot of them mentioned, but they were all really as expected. Nowadays for business taxes, there's really long consultations and a lot of discussions with the department, which is really, really welcome from business, and in particular with the concurrent international tax changes that are chugging their way through both the EU and the OECD discussions. 2 things in particular, the R&D tax credit and knowledge development box have been extended and enhanced, and they're probably 2 things that we can use in Ireland to differentiate ourselves internationally, but it's a real tightrope in trying to get the international tax right and compliant. So not much information on the changes, but it does look like for SMEs certainly and startups that the R&D tax changes will be will be beneficial and may attract more startups to actually try and claim the credit now from year one, in that it looks like there's a real cash refund from the absolute start. But we haven't got full detail or full confirmation on that yet, even with the updated paper, even with the supplementary papers. The share scheme for SMEs, providing shares to employees. We have this KEEP scheme, which had been broadly, again, subject to consultation. There has been changes today and enhancements to the relief. I don't think they're absolutely game changers, but they certainly will help and are very, very welcome. Will probably help, and if they do apply to those companies already. Those companies who already have issued shares and are thinking about redemption and the exit point, but certainly a step in the right direction for KEEP. And the other one is SARP, which is the income tax relief for individuals, executives coming to Ireland with their group company. This relief had been due to expire from 31 December. An absolute cliff edge has now been extended. It results in, rather than those individuals paying a 52% marginal income tax rate on income above a certain level, it's now broadly a 40% rate. The level had been 75,000. That's been increased to 100,000, which I suppose is fair enough with cost of wages and cost of inflation increases. For farmers, an extension to the old reliables, the usual reliefs. Not much else in it for farmers. Not sure whether they avail of the new energy refund scheme. Probably do. 100% allowance for slurry storage. Other things, cigarettes up by 50 cent, and looks like the carbon tax changes will be neutral. With that, there's been no changes to capital gains tax, savings tax, inheritance taxes, gift tax, and no mention at all on pensions. And these areas, if you've been following tax in the last few weeks, have been absolute hot topics. In particular, with the Commission on Tax report, which was published a couple of weeks ago and recommended really, really sweeping changes. The Minister did announce some, on the back of some of those recommendations, the Minister did announce some further reports to be commissioned. Really welcome on the use of on funds and saving products, and probably with more investigation on this new 30% rate of income tax, but nothing further. And I'm sure, as anyone would have heard, the political furore in the past few weeks on capital taxes, it seems to be off the agenda now for the medium term, we'll say. So in brief, I suppose there was a lot of reliefs due to expire, a lot of mention of these, a lot of tax aspects in the budget, but nothing particularly surprising or earth-shattering, which I think is a good thing now. It's very much a kind of nearly a consensus-based approach, in particular for business taxes, and welcome in particular when we see what happened in the UK last week with sweeping changes. Will be further changes and further detail probably in the finance bill, which is in 3 weeks' time on the 20th of October. In advance, we'd hope that there is maybe some more detail on the refund scheme for energy costs. We would hope that that's sooner, because the intention is, or I understand the intention is, that applies for will apply for September, October of this year. So with that, I'll let you get back to the rest of the day. Thank you.